Welcome to the Investor Mel and Dave show, minus the Investor Mel portion of it. Now today we're going to be doing something new. We're going to be chatting about issues that are going on in today's world, and we're going to be discussing how does this affect you as a real estate investor. Please make sure to subscribe and hit the bell. That way you're notified every single time that we release a new video, which is twice a week, and also when we go live, which is at least once a week. First off, let's talk about Bitcoin. Now everyone's always talking about Bitcoin, and I kind of got tired of hearing about it and not being in the game. So what did I do? I decided to take a little bit of money and invest into it. So I started off putting $5,000 into it, which quickly turned into 10. So that caught my attention, and then I invested another 10 and then another 10. So within a couple of weeks, I was now into Bitcoin for $25,000. Things were going great. I had doubled my money. I was up to $50,000. So I started thinking, you know what, people are right about this Bitcoin thing. I can ride this train. However, I lost some money. And here's why. Okay, as of today, the Canadian Bitcoin evaluation is, I think, at 45,000. And when I made my money, it went all the way up to, I think, 50,000 or 52. So what does this mean to a real estate investor that doesn't like to lose money? It hurts, okay? So my Bitcoin, I was up to $50,000 of value for my $25,000 investment. And I think I'm down to $41,000. So still ahead, right? Still making money on that money, but it has gone down. It went up a little bit today. But this is why I think I don't really dabble into stocks and Bitcoin, because I just don't have that appetite. So as a real estate investor, why am I doing the Bitcoin thing? It's a little fun, had some extra cash flow, wanted to do it. But this just truly reaffirms the fact that I want to invest in real estate, and any money I have over and above, I'm going to put it back into real building. So my advice to you, and again, take it with a grain of salt, is right now it's down. If you're looking at getting into it, maybe you buy a little bit of Bitcoin right now. Who knows? It might soar up again. They're predicting that it's going to go up to 90,000 or even 100,000 American. If I could buy when it's low, right? Obviously everyone wants to buy when it's low, and I could see it double, triple, whatever it is, I would then cash it out, and then I would use that as a down payment on an income property. So I saw this as a way to possibly fund my next real estate deal. I don't see myself being a long-term Bitcoin person. I'd rather brick and mortar. That's just me. But yeah, if you're going to buy when it's low. It kind of crashed the last day or two, and then who knows what the ride will bring. Now, the thing that's on everyone's mind, 2021, what do we see happening in the real estate world? So I follow a lot of different people, and I like reading a lot of different news articles, and I'm honestly torn as to where I see the market going. I want to discuss both scenarios why you should not worry. So let's look at it as if the market continues the exact same. Supply continues to be scarce, demand continues to be high, and the interest rates continue to be low. It's almost free money right now, which is driving the market insane. Let's say 2021 continues the exact same way. What does this mean? As a buy and hold real estate investor, I suggest that you keep buying. I'm continuing to buy in 2021 because it's not timing the market, it's time in the market. Now, what do I mean by that? People ask me, if the market is hot, why would you buy right now? Because I want to buy that building. I don't want to wait a year or two to see if it's going to crash or when it's going to crash, right? It's going to crash at some point. It always does. It's cyclical. I want to continue owning buildings and buying them because that's a year or two of appreciation I've got into it. That's a year or two of cash flow that I've got from that building. So for this scenario, if the market keeps going up, I'm going to continue to buy. I suggest you buy, obviously buy the right buildings, because you can get a lot of great deals still in a hot market. Now, what if the market tanks? Other people are predicting that 2021 is the crash year. They kind of did that with 2020 as well, and look what happened. But let's say the market crashes. How does that affect long-term buy and hold real estate investors? Here's my philosophy. Let's use $1 million purchase. Let's say I purchase $1 million income property early 2021. And let's say, for example purposes, mid-2021, the market falls out, it bottoms out, it crashes, and my building is no longer worth $1 million, but it's now worth $800,000. Ouch, right? A $200,000 dive. I don't want that. No one wants that. But look at this. The rents that the tenants were paying at the $1 million mark and the rents that the tenants are paying at the $800,000 mark are the exact same. So my cash flow doesn't change. The evaluation of the building changes, yes, but I'm not selling it. I'm holding it for the next 30 years. So what does it matter if this year it's worth less? Because when the market gets back up again, the building will continue to appreciate. My rents are still coming in, my bills are still getting paid, my mortgage appreciation continues to grow. And again, I'll look like a genius 20, 30 years from now when the building that I bought for $1 million is hopefully worth $2 million, $3 million, whatever it is. The other thing about the market crashing in 2021, if it does, we will continue buying buildings because now they will be at a reduced rate. Yes, my buildings that I currently own will take a hit in evaluation, but I have prepared myself, and I hope you do as well. As a real estate investor, I hope you have some reserves, some private lenders, some money lined up so that when those deals are ready, you can be that shark in the water that just pounces. One thing we can't forget is the election. Everyone's hearing about it, everyone's talking about it, that's all the American news has on. Joe Biden is going to be the new president of the United States. Now, how does this affect us as real estate investors? Well, there's speculation about the tax plan. Will it be as beneficial for real estate investors as the Donald Trump one was? My sources are saying that it probably won't be as good for real estate investors. So this might mean that Biden's tax structure may not be as favorable for real estate investors as Donald Trump. Now look at it this way, Donald Trump owns billions of dollars of real estate. So obviously, as a business person, he would have wanted things to be structured as good as possible for real estate investors. Who knows what Joe Biden will do? He's not a real estate investor, right? Will he be as favorable towards those tax breaks? I don't know. But again, the sources are saying probably not. The next thing that there's speculation about is the 1031 tax exchange. Before I get too ahead of myself, you might be thinking, what is the 1031? The 1031 exchange allows real estate investors not to pay capital gains. Basically, as long as you don't receive that money, so the portion that would have gone to capital gains, if you put it into a third-party escrow and then you use that to buy another building, you don't actually have to pay the capital gains. But enough about getting into that. Just know that real estate investors love this. This is something that Americans have been using in order to not pay capital gains on their income properties for years. There's speculation again from my sources that this might be something that goes on the chopping block, and that is something that real estate investors will truly miss if that happens. I hope it doesn't happen, but I guess we'll have to wait and see, but it is in discussion. Other rumblings that I've heard from my sources are potentially Joe Biden increasing the capital gain amount. So as of right now, capital gains is at the 50%. There are rumblings that they are looking at increasing that to possibly 70, 75%. And real estate investors have been benefiting from this for years because the capital gain is only 50% as opposed to 100 or 75. So anything that increases ends up directly hurting real estate investors. So as a Canadian, why should this worry me and any other Canadian investors? Well, we've all seen it before, right? Whenever the states do something, we're basically attached at the hip and we end up following suit eventually. This is why Joe Biden's presidency might have an effect on Canada. Now, speaking about that, we have also heard that Justin Trudeau has talked about doing some of the same thing. We've heard speculation that Justin Trudeau, in order to pay for all the COVID spending, might also be increasing capital expenses. I'm going to throw a little bit of history at you. In 1990 in Canada, they increased the capital gains to 75%. So don't think it can't happen again. It already has been set, right? The precedence has been set. Now, the argument that I'm hearing is this might just be short term in order to recover the COVID expenses. They were told the exact same thing after the wars when they had to do a short-term tax system in order to pay for it. And we all know that didn't go away. So I'm thinking the exact same thing. Something even scarier. They are also talking about when you sell your principal residence having to pay capital gains. Right now, you do not have to pay any capital gains on your principal residence. There is rumblings of them starting to charge that, which is very scary for a lot of people. Think of everyone who has their primary residence as their actual retirement plan. If the government imposes a capital gains tax on that, that can affect your actual retirement plan. So very scary stuff. I hope it doesn't come to fruition, but just wanted to let you know the things that we've been hearing. So hopefully you enjoyed the first episode of the Investor Mel and Dave Show minus Mel. Typically I would send you to another video similar to this, but since it's my first one, how about you go check out the video we did on Dave Ramsey and why we disagree with his beliefs. I'm Dave and I'll see you next time.